In this video, we are looking at June 2023 accounting paper 1 metric. We'll be specifically focusing on question 2 of the paper, which is your notes to financial statements, cash flow statements, and the financial indicators associated with such. Okay, so just without further ado, let's get into the questions. Question 2, cash flow statement and financial indicators, which is 40 marks, and we're supposed to complete that in 30 minutes. Okay, so choose the correct word from those given in brackets. Write only the word next to the question numbers 2.1 to 2.1.3 in the answer book. So the very first question says an increase in inventory represents an inflow or an outflow of cash. So here, an increase in inventory simply means we bought more inventory and we have used more cash. So now if we have used more cash, that is an outflow. And then the second one says a decrease in accounts payable. Your accounts payable could be your creditors, or it could be your trade payables. So a decrease in such accounts, does it represent an inflow or an outflow of cash? So if our creditors have decreased between 2 consecutive years, that simply means we have paid our creditors, we have used cash, so it is going to be an outflow of cash. Okay, third one says an adjustment for depreciation or income tax should be made when calculating the cash effects of operating activities. So which of the two here between depreciation and income tax do not form part of our operating activities? It's depreciation, because depreciation just occurs when we are using our assets, but it is not part of our operating activities. That is why we are supposed to adjust for depreciation. So here it is, depreciation. Okay, so let's just quickly populate our answer book. So it's outflow, and then here it is depreciation. Cool. And 2.2.1, we're just gonna complete that real quickly. And then it says prepare the retained income note on 28 February 2023. What we really need to do for the income note at first, for the retained income to say, we need to just quickly fill it in, because it is exactly the same every time. You know what you are supposed to do when you have your retained income note. So here you will have your repurchase of shares, and then as we continue here, one last item, we have our interim dividends. Okay, so now we definitely know what we need to look at. What kind of information do we want? Okay, so we're going to start with the repurchase of shares. So repurchasing of shares, we're going to get our information here on information D, which says share capital and dividends. 1st of March 2022, 1,190,000 shares were in issue. Then the 30th of June 2022, 85,000 shares were repurchased at 2 rands above the average share price. These shares do not qualify for dividends, so this is quite easy. 85,000 shares were repurchased at 2 rands above the average share price. So that simply means your 2 rands is what you record on your retained income. So it's 2 times 85,000, and then you will get 170,000. Okay, let me just quickly grab my calculator and see if that is true. So it's 2 times 85,000. Yes, it's 170,000. Then our interim dividends. Just take note of this piece of information. These shares do not qualify for dividends. So that simply means when we declare dividends, we are going to declare dividends for how many shares? For 1,190,000 minus 85,000. Okay, so we are going to declare shares for, just quickly calculate, for 1,105,000 shares. Okay, so now we are going to issue out interim dividends of 12 cents per share for how many shares? The shares are 1,105,000. So it's just gonna be 12 cents times 1,105, and just see how much that is. So that's 132,600. Okay, so it was 0.12 times 1,105,000, and then that's 132,600. So here you have a bracket, also here you have a bracket, and then you add these two together and see what you get. 7070, and that's 339670. Okay, so now we're supposed to get our balance on the 1st of March. And looking at our information here, information C, we are given our ordinary shareholders equity and our ordinary share capital, but we know that our ordinary shareholders equity is made up by our ordinary share capital and our retained income. So if we just remove our ordinary share capital from the ordinary shareholders equity, that is when we would be able to get our retained income. Okay, remember, retained income plus ordinary share capital is equal to ordinary shareholders equity. So we are given this and this. So if we take this, get it to this side, so it's just gonna be OSHI minus OCOSC. So that's gonna be your retained income. So this just simply calculate, it's 9814. Remember, we're doing it at the start, that is why we're using the figures for 2022. It's 9520, and then that's 294. It's 294. Okay, so now we can calculate the balance at the end and see how much our retained income is. Let's just quickly calculate there. Remember, where the brackets you are supposed to subtract. And my final answer is 568,330. Okay, so now we're done with our retained income. Then the next question requires us to complete the cash flow statement on 28 February 2023. Note that some amounts are provided in the answer book. Okay, so let's just move to our answer book and see what we are required to do. Cash flow statement for the year ended 28 February 2022. Information is not required in shaded areas. So all of these areas that are shaded, we're not supposed to do anything. Okay, so first things first, like for sure you have seen, I would like to just fill in my answer book first, and so I know that I need some certain information from the information that I'm given, and I don't waste my time. So here I have taxation paid. Remember, this is your cash flow statement. You should be knowing the formula by now. And then here you have your dividends paid. All right, so then we move on, we continue in populating our cash flow statement. Now we have cash flow from financing activities. Remember, your financing activities are the activities that will result in the company having more money or more cash, or it could be those that result in the company paying cash to certain people or certain creditors. So here the first one could be change in loan, because we might have a loan. Then the next one should be your repurchase of shares. Okay, and then there's supposed to be a line there, just add one quickly. Repurchase of shares, and then here we have proceeds from issue of shares. All right, okay, so let's just quickly look at our information. We'll start with the taxation paid. So with taxation paid, it should be three amounts that you are supposed to use. It's your amount here, 9,660. Remember, we're looking at our source income tax, and then it's your 20,020, which has a credit balance. So the credit and debit balances are really important when it comes to taxation paid. So let's see how we're gonna approach our taxation paid here. But if you've watched the previous videos that I have uploaded, you probably might have seen how we do our taxation. So at the end, we know it's going to be an outflow. So now we have balance at start, and then we have amount from financial statement. I'm just going to say FS, financial statement, and then we have balance at end. Okay, so our balance at start, it is 20,020, but it was a credit balance. That simply means we owed SARS. Remember that tax is a liability. If it's on the credit side, we owed SARS how much? 20,020. So it's gonna be in brackets because we have to pay SARS 20,020. Then amount from financial statement, which is your income statement, you get it from, you extract from the statement of comprehensive income. Okay, so here they say income tax was calculated at 30% for the current financial year. Because we're not given any income tax here in this information, we're supposed to calculate the income tax for the current financial year on our own. So our income tax is equal to 30%. Okay, it is 30% of our net profit before tax. All right, so what you want over what you know multiplied by the amount given. So it's 30 over 100 multiplied by 1,120,000, which is 33336. So this amount will always be in brackets, whether you like it or not. But it should always be in brackets because we are supposed to pay SARS that amount of tax. And then the balance at the end, which has a debit balance, plays a huge role in actually determining that we have paid SARS more or less. So if it's a debit balance, SARS owes us. And if SARS owes us, that simply means we have paid. Listen to this. We are focusing on the cash flow statement. Now, that means we have paid SARS more money. If we have paid more money, that simply means it's an outflow of 9,660. So let's see how much we have paid in total. So we can just simply add all these amounts because they are in brackets. Then we get 365,680. Okay, let's just quickly write that. It's 365,680, and then our amounts were 20 plus 9660 plus the last one, which is 336. 1, 2, 3. Cool. And dividends paid are always simple. You have paid what you declared the previous financial year and what you have paid this current financial year, which is only your interim dividends. So here it is only interim plus final from previous year, which is your interim. Here we had for this current financial year, it was 132,600. Okay, so here we have 132,600 plus what you declared last year but you never paid, which is your shareholders for dividends at start, which is 150,000. So those are the dividends that we're supposed to pay this year. So it's 150,000. So we consider them as being paid. So we can just quickly add the two amounts and we'll get 282,600. So let's quickly move on now to our change in loan. Change in loan, you just compare the two amounts and see if it decreased or increased. Change in loan, okay, so we have non-current liabilities. We're not given our loan directly. So we have 980 to 735. So the two amounts, now we have a loan amount that is much less than before. So that simply means we have paid a portion of the loan and it has decreased. So that simply means it's an outflow. It's 980 minus 735 and then let's just check what that gives us. 735, which is 245,000 change in loan. That's an outflow. Then repurchase of shares. Okay, we move to our repurchase of shares. Our information says 85,000 shares were repurchased at 2 rands above the average share price. Remember that on the cash flow statement, we are supposed to include everything, including your average share price. We include your average share price and your premium. I like to call this amount, which is 2 rands, I like to call it a premium because it is what we pay above our average share price. So how do we get our average share price? So our average share price is equal to your ordinary share capital over the number of shares in issue. Shares in issue. Okay, but how many shares were in issue at the day we repurchased shares? It's 1,190,000. So it is over 1,190,000 shares. How much was the ordinary share capital? 9,520,000. Okay, this is where I got the 9,520,000 because it is your ordinary share capital. So let's just see what that would give us. 190. So that's $8. So that's 8 rands, which simply means we have paid 8 rands plus 2 rands. So we can just simply say 10 multiplied by 85,000, because this is the total amount that we have paid to repurchase the shares. So that's 800. Okay, wait, is it 85,000? Okay, that's 850,000 and repurchased shares. And then proceeds from issue of shares, as we go back to our information, on the 1st of November, it says here 2,479,500 was received for additional shares issued. So those are just the proceeds. It's 2,479,500. It's 2,479,500. Okay, that's just what you need to do. And then here, don't forget, it's an outflow. We need brackets there. And then we come to the net change in cash and cash equivalents. And then there's cash and cash equivalents at beginning. There's also cash and cash equivalents at end. So we're given the cash and cash equivalents at the end. So we can do the one at the beginning and see what we had, and then we can just get our net change. All right. So for cash and cash equivalents, you need to take note that it goes along with your bank overdraft. So if there's no bank overdraft, that is okay. But if you have a bank overdraft, you have to consider it in your calculation when you're calculating your cash and cash equivalent. Now we are given cash and cash equivalent here at the start of the year. We have 15,450, but I'm also seeing a bank overdraft here. At the start of the year, we had a bank overdraft of 28,480. So our bank overdraft is over and above our cash and cash equivalent. So we can just take this 15,450 minus 28,480, and that will give you a negative answer of 13,030. So what I said here, it's 15,450 minus 28,480. Okay, now getting the net change is pretty much easy. You can just do a reverse calculation here. Because we subtracted this amount, we are now going to add it back to the 92,840. 140 plus 13. Okay, so the net change is 105,780. All right, so we are done with the cash flow statement. Now we're supposed to calculate our asset test ratio, return on average shareholders equity, and then last but not least, our dividend per share. So asset test ratio, it's current assets minus inventory. Inventory is to your current liabilities. Okay, I'll just shorten that. Now you know that it is always to a number, and it is always a number to 1, so don't forget that. All right, so let's calculate our asset test ratio quickly. Okay, our current assets, we have 2 million. Okay, I'll just need to use the space so that we don't have our workings up pretty far. Okay, so our current assets, it's 2,175,600 minus our inventory of 1,469,700. all right, and let's see what our answer is. Minus 1,469,700, which is 705,900. Now our current liabilities are 753,065. Is 2,753,065. You know, this is to 1, and then you can just say 705,900 divided by 753,065, which is 0.93, and then your final answer could be 0.9 is to 1. So our answer here is 0.9 is to 1. Okay, just to fill in the working. So 753,065 is 1 and 0.93. Yeah. Then our return on average shareholders equity, you know, you have this at first, you have 100, and then you have a half here. Okay, here you know you have two amounts at start plus at end. Here I'm just talking about our share return on shareholders equity. Okay, but here we just going to use our shareholders equity, I mean to say, and then here we're gonna use our net profit after tax. Okay, it's really important to remember the formula so that you don't flop and lose petty marks just for simple things. Okay, so we're gonna look for our net profit after tax. Information is kind of far. Okay, here I've got it, 784,000. Let's just quickly write that down, 784,000. And then your average return, because remember this is return, this is on, and then you have your average shareholders equity. All right, see how easy it is to interpret the formula. Okay, so let's get our ordinary shareholders equity. So that at first we have 9,814,000, and then we had 11,887,820. okay, you can just start with whatever whichever one you want. 820 plus, okay, let's check. Don't quite remember the numbers because they are full here. So it's 9814, sorry, it's 9814. All right, and then we're supposed to calculate there 784 over half. Okay, you can just simply type 0.5 to 11887,820 plus 9814 okay, times 100. Just give me a second. So I'm getting 7.23. Yeah, that's what I could say. So but here you can just say 7.2%, depending on the instruction. If you're supposed to round off to 1 decimal place or 2 decimal places, then you are supposed to give your answer in that format. And then now, last but not least, our dividend per share. Remember that here we are calculating our dividends per share separately because we had a change in the number of shares issued. Whenever you have a change in the number of shares issued, regarding your interim dividends and your final dividends, you're supposed to calculate those differently. So we had dividends per share. Remember, this is dividends per share. So this is dividends, this is per, this is share. So that's how your formula is always structured. Okay, so our dividends that we had here, we will have enter in this side. Remember, we had 132,600, and those dividends were only for 1,105,000 shares. Plus, we had 207,070, but let's just check if that amount is correct. Yes, it's 207,070. Yes, over how many shares were there at the end when we declared the final dividends? Let's check. Okay, so 1,380,500 shares were in issue at the end, because this is 28 February 2023, and then the final dividend was declared after that. So the final dividends were declared for a total of, were declared for a total of 1,000,003. Oh, give me, I've forgotten that amount already. That's 1,380,500. All right, I've got it now. So it's 380,500. All right, so let's just see what our total is there. 105 plus 207,070 over 1,380,500, and that's 0,2. I'm getting 2,6999, so just say 2,7, and then here you can just say 27 cents. Okay, and that concludes our lesson for today. Thank you so much for joining me. I really hope this has been productive and you have learned a lot. So if you didn't understand something whilst I was covering the topic for today, you don't be afraid to drop a comment and let me know what you are actually struggling with. Once again, thank you so much for being with me today. Don't forget to like, subscribe, drop a comment, and share with anyone who might need help with accounting. It might be a friend, it might be a family member, it might be schoolmates. I will definitely see you in the next video. Cheers.